Okay, let's start. It's 4:30 at least, so it's time for today's event. Welcome to all of you here and also to the audience that is with us online. This is the second edition of our CBS Futures of Tax series, organized mainly by Sid. It, in my opinion, at least kicked off splendidly a few months ago when we had Pascal Sanderman with us, providing interesting insights from his background in top-level international tax policy. Today, we have with us a top-level in-house tax professional, Mette Jacobsen, who is the head of tax and vice president at AP Møller-Mærsk. Mette has a long and impressive career in tax practice, also working in organizations such as Smith, PwC, and the Danish tax authorities. So, big welcome to you. We are thrilled to have you with us, and I'm sure that you are in very good hands with Sid when you start discussing in a moment. At least I'm looking very much forward to listening to your conversation. As we go along, you are more than welcome to ask questions. That will just make it even more fun. I think both of you are here in person, or if you are attending online. If you are online, just write your question, and Linnea will read it aloud, so you have a chance to respond to it. So that's all for me from now. But before I give the word to Sid, I will give the word to you, Christina, to say a few things.
Thank you. Thank you, Peter, and welcome everybody to Copenhagen Business School. This is such a nice opportunity to get together. My name is Christina Lubinski. I'm a professor at the Department of Business Humanities and Law, and I started a little project called Rethinking Entrepreneurship in Society. And one of the massively innovative things we did is we incorporated Peter Kerber-Schmidt and Sid Rao as tax experts into that project on entrepreneurship. So we're trying to build bridges between communities that normally don't look at each other and don't talk to each other and avoid each other's company as much as possible. So we're hoping that there is some good synergies that come out of entrepreneurship research and tax research, and kind of understanding how we can rethink entrepreneurship for and in society, and what tax has to do with it and how that can help with it. And maybe Mette is actually a wonderful person to talk to about this, given all of your experience with one of the most entrepreneurial companies, I would say, in Denmark. So we're very excited, and of course a lot of credit for the entire series goes to Sid Rao, who has organized it and put it all together. So my big contribution today will be, let's give him a hand. So to thank him for all of the work that he has done.
Thank you so much. So, good afternoon, everyone. I would say good afternoon or good evening, whichever time zones you are joining us from, because we also have online audience who are joining us from different parts of the world. So thank you so much for joining us here. Before I dive into the conversation with Mette, I just want to again reiterate why we started the Futures of Tax. Is the main aim of the series has always been, because we are here at a university and we are a neutral forum where people from tax authority, people from governments, people from academics, or people working in the industry can come together and freely share their thoughts, which they cannot share publicly. So the aim of the series has always been to provide a neutral forum which hopefully will affect the tax policy making or affects how the governments are legislating new laws. And thank you. I have a special guest today, Mette. She doesn't need any introduction. Mette is the head of the tax of Maersk. And the title of today's discussion which I'm going to talk with Mette is navigating tax in the volatile world. Yeah. When I say volatile world, the phrase volatile world, I find it a bit redundant because now it seems a bit of a normal, because considering what is going on, the volatility is a new normal for us. So that's the topic, and which will be here, the word volatility much more often during the conversation.
So can you take the mic a little away from you? It has a
Okay.
English.
So the way the discussion is going to work is I'm going to introduce the topic, and I will have 4 rounds of discussions where we will have different issues, and then we will ask questions from the audience. So during the discussions, if you think any of these issues which you find interesting, or if you have any doubts, you can always ask questions. So don't feel shy to ask questions. So please, and for the online audience who are joining us online, if they have any questions out there, please type them up on the Zoom chat so that one of my colleagues here can let me know. So with that, maybe I just start with my first round as to where we are heading. The first is what I wanted to talk about is a tax strategy of the shipping industry. Yeah, shipping industry is a cornerstone of the trade or the internationalization, and considering what is going on in today's world, especially in the tax world, what we have is the pillar 2, which is the biggest change. But in case of shipping companies, I will come back to Mette later on as to there are carve-outs and exemptions for shipping industries. Then there is an issue about because shipping industry also has to, Europe has newly introduced in 2024 something called as a ETS, which is related to emissions. And because the shipping industry emissions are also, it also gets affected by emissions. And the third is, the factor is because of the company like Maersk, who has 900, 800 subsidiaries, yeah, and who has operations all around the globe. It has to deal with the things of transfer pricing. So all those issues come into the picture. So before I start with, I just wanted to start with the basic questions to Mette is, when you look at your tax function, which is today versus what it was 5 years ago, which is what is fundamentally different in terms of this volatile world, in terms of the changes what we have seen in last a year or 5 years, you say?
Yeah, I think it's fair to say that tax functions has changed dramatically. Maybe extended to, like, if you say 10 years ago, it was much more about tax advisory. Today, you know, the overarching topic or thing would be compliance. So I think if we look at the tax function at Maersk, we have close to 200 tax professionals, and more than 2/3 of them are doing only compliance. So that's something that has changed. Another thing that is changing is technology that is also coming in. Probably there we are in the beginning. But I think if I think back in my career to some of the seminars I participated in, it has been a lot about, you know, structuring organization and planning and so on. Today it's about, you know, how do we get data? Data is the key to everything. So we spend a lot more of our time on data and managing data, getting access to data, and preparing the compliance. Another thing that has also changed is And that has to do with how most companies have transformed and also Maersk, where historically you would have local finance teams also doing the local tax compliance. Today, most companies, that's also true for Maersk, has shared service centers where a lot of the transactional work is performed. And that means that you also need to think about your tax compliance in a different way. So we have today a global tax function in Maersk. So our responsibility is not just the old-fashioned tax advisory, but it's the end-to-end operations of tax. So we monitor the law changes, we follow up on that, we implement it, we file tax returns, or we manage tax returns if it has been outsourced. A lot of our compliance today is outsourced. So at least 2/3 of our compliance is outsourced to a third-party provider. And we are in the process of being able to bring that in-house. We believe we are better at managing our own compliance and any third-party professional as good as they are, because we are so much closer to our business and know the transaction better. But to be able to do that, and particularly we are in 130 countries, so we will never be able to have tax professionals in 130 countries, but we'll have some centers who does it. So I think we are definitely structured differently today than we were 5 years back.
And as you mentioned, one of your remark was about the compliance, and your aim is to bring the compliance of the 130 countries which you operate to in-house. Yeah, and it also brings into the question the role of the compliance professionals. Like, just imagine a person or a student from CBS who is having a degree in tax, just finished his master's and wants to work in the compliance. So, and considering the revolution of technology, which is AI, which is going to do so many things, which you need so many number of hours. So how does let's imagine a student who wants to, because compliance is the bread and butter of a tax function.
Yes.
Yeah. We need to file so many reports in so many countries. Something that's wrong, we are slapped with penalties. So what do you see the future of a profession as a compliance?
No, I think, and I absolutely hope that you are right if what you're saying is compliance or AI will take over some of the compliance, because the compliance burden has gone up like this over the last 10 years. It is crazy the amount of additional layers that has been added to this, and with the OECD pillar 1 and 2, that is just another one. So I think that we will still need all the tax professionals, but the roles will be slightly different and probably even more exciting, I would say, because it's about understanding the rules and the law and finding out how to implement it, understanding the business. That is important. And if you can have technology that helps you with 80% of the data collection, we spend way too much time on poor processes, I would say, today. So one of our biggest pain points, if we are to prepare tax return, that is to get financial statements audited. And it seems very easy, but in an organization like ours, there's a lot of focus on our annual report, the group report that comes out, and then no one really cares about the financial statements for all these hundreds of legal entities. It's something that needs to be done and filed, but it doesn't have high priority because no one needs them except for the tax function, more or less. So it's a task that's outside of our scope, at least today. and it needs to be audited. So it's the local gap, which is different from country to country. You will need to wait to get it audited. We see today that we often spend too much time on chasing this and getting data too late in the process. So sometimes the data is not perfect, and we need to make adjustments to it, because what you use for accounting purposes, your materiality level, is much higher than what we can live with. We need it much more accurate than what our colleagues in accounting needs. So there's a lot of working with data, and that's really not exciting. That's not what anyone spends 5 years in the university or CBS to sit and gather data and change colleagues. So I think there's a lot that can be automated and benefiting everybody. So the work of the tax professionals can be much more value added in the future, being more strategic, analyzing data. And then there's a whole transparency agenda that is also very dominant today, where we need to be able to communicate to the external world about our tax. So there's a lot more focus on the tax function today, and the work. I guess historically that was something that happened after the fact. You filed a tax return, and there was not the same focus. Today we need to be able to publicly explain what we do and have a view on that. So it has changed. It's much more holistic to today, and then of course there will always be tax audits. And we'll also need tax professionals to navigate through the audit, which is a different discipline.
Yeah. But do you think the auditors will be needed?
Auditors like
human auditors, the way we have so many auditors,
like the financial auditors. I think a lot of their work will be taken over by AI. Machine learning and so, and I hope so, because and I think and you mentioned the 800 legal entities we have. When I started in Maersk, we had 1,200. So we have been bringing that number down. It's very easy to open up a new legal entity, but that comes with a lot of compliance obligations. So it's not very efficient. So today we have a strategy of having as few legal entities as possible. So we are merging a lot of entities. So now we are down to the 800, but in that same period we have acquired a lot of companies. So over the last 5 years, we have acquired a lot of new companies, and they all come in with their different ERP systems and different data structures. And before you can convert that into something that is a Maersk standard, and we are not DSV, so we don't have the same muscle in just integrating as fast as they do. So we end up spending so much time on navigating this and finding the right data.
Yeah, I think this is really interesting because people who are multinationals who are having a business spread over so many countries, there's something like if you're reducing number of entities, what was it? But and generally the reason, like what is the logic behind reducing the number of entities? Is there like being efficient in terms of managing the entity as a whole, or reducing, let's say, to bring the shareholders value?
It's simply not very cost efficient to have so many legal entities, because each of them come with compliance obligations. So you need a separate bookkeeping system. You need people to key in transactions, even if it's just a few transactions. You need to prepare financial statements. You need to prepare that needs to be audited, and you need the tax filings and transfer pricing documentation, what have you. So it is too costly. We have estimated that for us to keep a dominant entity alive is $35,000 per year. just in compliance, and at least 50,000 for US for an operating entity. So there is something to say from that. And it just creates an additional complexity that is not really benefiting anyone. It's difficult for the customers to know who they are dealing with. They basically just want to deal with Maersk. And if we have 10 or in some countries 50 legal entities doing ocean and 30 doing logistics, it's just not very practical, and transactions between all these entities and transparency documentation, it just adds so much complexity, and everything needs to be reported internally, and someone in back office functions needs to deal with this. We have put in place a committee who will say no per default if you want to establish a new legal entity, unless you have a good reason to it. Of course, it can be done. Sometimes we need it because we need a local license or whatever. But I think in the past it's so easy. It takes no time to open up a legal entity, but it takes sometimes years to close it down. So.
Yeah, really interesting. But now I have to come back to the most crucial questions. I think this is something our online audience are also interested is Pillar 2, which is everybody jumps onto it when I say Pillar 2. Is one of the things about the Pillar 2 is how it is in theory and how it is in practice. Yeah, I presume I haven't read the 600 pages because they come out every 6 months, 700 pages of updates, which is sometimes you are difficult to know what are the updates out there because they are updating it every so often, and the OECD comes out with the update so often that sometimes you get lost into what is the current practice. So correct me if I say something wrong, is international shipping income is exempt from Pillar 2. There is a carve-out, yeah. But this is really useful. But when I look at Maersk or other shipping companies, these are not, because in the world now, nobody is just a pure shipping company. And Maersk is not a shipping company. You have warehouses, you have trucks, you have, what else? You
Airplanes.
have airplanes. Yeah, I didn't know Maersk had airplanes because when I first thought about Maersk, the first thing comes to my mind is just ships. Yeah. But you have so many different verticals, but people always think about Maersk is a shipping company. Yeah, and the Pillar 2, you have a carve-out. So how does, as a tax head of a company which has a different verticals, one vertical it has a carve-out, other verticals don't have a carve-out, but those are also crucial businesses. And this is not just for the Maersk as a shipping company. These are the issues being faced by many companies who are international, who have a different verticals. Yeah. So how does you, in practice, how are you implementing Pillar 2 when you have a few verticals which are Pillar 2, few are non-Pillar 2?
Well, we used to it because our shipping business has always been taxed differently, and that's of course also the reason that there is a carve-out for shipping. I think the practical issue here is that, and just to go back to why we have special rules for shipping. We have in Maersk 700 vessels sailing in international oceans, and typically, if you transport goods on an east to west lane, these vessels will call 16 ports on the way. So where do you tax the profit from someone who has a factory in Bangladesh who needs some Nike shoes transported via ocean and to a store in the United States? So and these will be on a ship calling all these. we typically say that 60 to 70% of the time that these vessels are on the route is in high sea. So it's in international waters. So no one really has the right to tax in that area. So where do you tax it? So that's why for many years the OECD has had the Article 8 saying, we need to make sure that everything is taxed. So we allocate the whole profit of that business to where the shipping company is registered. So in our case, all our shipping income, regardless of where in the world 700 vessels are sailing, it is being taxed in Denmark. And then Denmark has implemented tonnage tax, which is a way to tax the same this profit. So when the two pillars were introduced, we were very active also involved in this, and we now have we felt that it was very logical that we should have had a carve-out for Pillar 1, because the Pillar 1 is actually saying we shift the profit to the market. And then we had a lot of conversations with OECD on what does that actually mean, and then I think in all fairness that I wouldn't say that we're not happy with the carve out of shipping in Pillar 2 because the tonnage tax means that in years where we have high profit, our effective tax rate becomes lower. And at the same time, in years where we have very little profit and our income goes like this inside, that shipping has always been like that, and that's the main reason for the tax as well. Then in these years with low profit, we'll have very, very high effective tax rates. So effective tax rate is not a good way to measure a company like at least not on our ocean part of the business. So in the two, we would have the 15% top-up tax applying in certain periods. So it makes sense that we have the carve-out, but I'm pretty sure that we spend a lot more on our time on Pillar 2 filings on our ocean activities than we do on the rest of the activity. And people will probably think that it's the other way around, but it's not. Today, we have one definition of international shipping income for the allocation under Article 8, and we have another one under the tonnage tax regime in Denmark, slightly different, not too much, but then under Pillar 2, it is completely different. So when we transport goods from A to B, and there's a little piece of inland haulage, transportation, local transportation, both sides under Article 8, it is allocated together with the shipping income. That is different from Pillar 2. So when the Pillar 2 was introduced, we spent a lot of time on trying to separate the hot and the cold water, because this is information that we normally wouldn't have. When the OECD came up with these rules, it sounds very appealing that we'll just use your accounting data. You don't really need to create something new, but we didn't have this. We didn't need this data for any other purposes. So it's a completely different scenario. Trying to split the profit and cost relating to these things, which we have no other need to split. So it's a very, very practical topic. And I think we typically say that the data points that we need, a normal company would, I think there are 200 data points that you need to be able to pull out to prepare a Pillar 2 return. And some of them will not apply to all instances, but if you are in shipping, you can add probably 20% additional data points because of the carve out. So while it's good and it makes a lot of sense, it has created a lot of work internally for us. So it's the pillar 2 is, yes, it's tax, but it's more data and accounting.
Data and accounting, yeah. Before I go into the next questions, I just want to ask if anyone in the audience has any questions so far, what she has said so far.
Just a quick one. Thank you so much. I was struck by the kind of contrast between saying on the one hand, tax is very much compliance heavy, and on the other hand, it becomes much more holistic and even strategic. And so I wonder if you find that the people that, for example, come out of Copenhagen Business School or that you hire from other places are actually prepared for that straddling of the divide, and in which area could we potentially strengthen their abilities and their skill sets, because it sounds like this is a very demanding challenge for you.
And it is, I don't think that anyone out of Copenhagen University or CBS for that matter is able to go in and do all of this, and not many people in our tax function today can do all of these different tasks. So we are still very specialized in certain areas, but I think that, you know, the future tax expert will need to have a completely different way of thinking about data than I have been trained with. I've been struggling to really get my arms around what this. So I think you need to have a good accounting understanding as well to be a good tax professional. Because those two things are so closely related, and I don't think that when we educate the tax people, they get that training, and then technology. You also need to have flair for technology to some extent, and so you cannot just understand the laws and dig into that. It's not enough. So.
Can I? Yeah, just a second.
Thank you so much. Picking up on this. So it's one thing that's already a challenge, I guess, to get all the data out of your systems because they're not connected. There's sometimes commercial data, sometimes tax data, sometimes. But how about the tax authority? Because they need to reconcile on the other side what you present to them. How does that work? How does it work?
I'm very excited to see how it will play with Pillar 2, because and I have been with the tax authorities for some years. They are not trained in accounting, and now they will need to, you know, a Pillar 2 tax return is accounting data. You know, typically we take accounting data and we convert it into tax, and then those two things has their separate life. But here you need to work more on the account. I think they are going to struggle. I hope they are thinking about this and educating some of their tax auditors, because otherwise it's going to be difficult. And I think also for us, it'll be some difficult conversations, and it's much easier for us to deal with tax authorities when we speak the same language and we understand where we're coming from. I think it's going to take some years before they really get comfortable with this. I think it's a big challenge, actually.
Has it changed the data management strategy in-house?
Yes, definitely. It has. When we started out, we needed to, you know, one thing is that we in the tax function were looking at these 200 plus data points, and then, okay, so where do we find it for these legal entities? But we also needed to have one place to consolidate this information. So in our case, I know companies are doing this very differently. Some are acquiring system from Big Fours. What we decided was that we would want to get it into our existing infrastructure. So we have a consolidation tool on top of that we use for preparing our financial accounts. So all our legal entities are uploading data into this. So that is what we are leaning on. So we have that's one stream, and there we are saying that, all these data that we need to collect needs to be submitted in there, so we can pull it out and then put the logic on top of that to do the global calculation.
Maybe just before I move on to the next round, I just wanted to ask how many in industry are we there in the audience? Are there any people from the industry are facing the? I see one more Maersk, and you're from where?
Ørsted.
Ørsted. Is Ørsted is facing the similar issues on Pillar 2 in terms of what is the main issue which Ørsted has identified in Pillar 2?
Finding the data points. So I think.
So this is a key thing for many of the
I think so.
multinationals. Right? If you have the data point, then you have the Pillar 2 compliance.
Then it's not difficult. The calculation as such is not difficult. It's getting the right data and of course the definition of what goes into where. That it's just doing the calculation, but it's analyzing your data, making sure that how it works. Yeah, I don't think I've met any other multinationals who's not saying that the Pillar 2, the biggest issue is data, getting the data. It's not the tax payments in itself.
Yeah.
And I guess that it probably in a few years, all countries will have implemented the qualifying domestic top-up tax. So the need for the Pillar 2 return will vanish. But I'm sure that we will still have to do the calculations and the compliance. It's like you add on these additional layers, but no one ever takes out and there's the EU has a decluttering agenda right now, where they are also opening up for this to see what can be done, and we have for sure given our input also to that process.
No, I was talking with her colleague, and I was asking, what is the buzzword today in the tax industry? It's like now ESG, DEI. So in the tax world, the buzzword is decluttering. Like we need to reduce the make subsidiaries as less as possible.
We would at least like that to be the buzzword.
Yeah. So moving on to the second round, the shipping industry is really special. Why I say special? Because in terms of how you tax the shipping industry, it's not like all other. It's not the similar to all other companies, because shipping industry has something called as tonnage tax schemes, which is not available to others. Why I say that there is now issue has been happening is this tonnage tax scheme regimes. They have been improved. For example, UK had some time in the past had changed their tonnage tax scheme. Netherlands had changed their tonnage tax schemes. Some of the countries have added substance test as to be eligible for tonnage tax schemes. So my question was, is this burden for qualifying for tonnage tax scheme to fall under this regime? Does the benefits outweigh the cost, or because of the company like Maersk who has 130 countries, and does the benefit of having a single core versus everywhere you follow different schemes, you need to take care of different things, does the benefit outweigh the cost?
But the way the tonnage tax scheme works is that in our case, all Article 8 income is allocated to Denmark. So we only deal with the Danish tonnage tax scheme. And we are not considering shopping around in any way. I think if you look at it as a competitive factor, I think if you are established in a country, you don't easily move out and shop around. So we are where we are. So I think it's mainly within the EU's countries. We've all tried it. The schemes are different, but it's where you have your ships, your vessels registered, and where you are managing the function. So we have all our fleet management, all our logistics team sitting in Denmark. So that's where we belong. So there are differences, but it doesn't really matter to us, and we're not dealing with the others. We're dealing with countries outside of the OECD who is not recognizing the Article 8 and has introduced a freight tax. So we pay freight tax in many countries when we go there. That is de facto an additional tax on top of the same income that has been allocated to Denmark. So I don't think that the differences in the tonnage tax schemes are anything but Europe needs to be able to compete with countries outside of Europe, and in Singapore it's much more simple, there's hardly any tax on shipping if you are Singapore based. So yes, we could save money if we move to Singapore, but it means that we would be most of our businesses, a lot of colleagues to Singapore, and it would not be worth that.
Moving on, because we are dealing with the tax, and it won't be. We need to also discuss something on transfer pricing. Because why I say about transfer pricing, because Maersk has wrapped up a biggest case in 2023 in the Danish Supreme Court.
Yes.
Yeah, on the transfer pricing case. So I'm not going to go into the specifics of the case, but
That's good.
Go into too technical, because we also have people who are non-tax people. So just to ask about how the case is because when we look at the transfer pricing is about setting prices between related companies, intercompany transactions. But now when we look at what is happening all over, at least what we have seen in this case is these authorities are questioning the fundamentals behind the structures. So my question is the world moving away from shifting from is the price right between the two intercompanies to should this transaction exist at all? So it's like the approach has changed by the authorities altogether?
No, I don't think it has changed. And just to make it clear, the transfer pricing case that we lost in the Supreme Court 2 years back was not in our current business. It was on our oil activities that was divested back in 2017. In that case, it is some very specific things that happened, and it goes back to the years 2006, 7, and 8 that was ruled on. And I think my recommendation to anyone who would read that ruling is to don't over interpret that, because there's a lot that you cannot read from that. That is actually very important to understand it. So I don't think that you should. Basically, I don't think you should use that for anything except accepting that it's there, and we lost that case. I think the tax authorities are looking at the prices and more on profit levels, but at the same time, they also need to look at some of the transaction. I think it is much more difficult to look at the second part you're talking about on structure is a transaction there, and that really talks into have you done something wrong also, and so it really depends on the pattern and the combination of the facts. So if someone has structured themselves out of a situation, then I guess it's fair that the tax authorities are asking about that. But at the end of the day, it is about where's the profit tax on intercompany.
Yeah, and just to ask, because this was a really big case, so that's why I heard, because Maersk was the
Yes,
it's the case. And just to ask, because Maersk is really a big company, but there are also shipping companies which are smaller, who are doing smaller businesses. So just to ask, small companies who doesn't have resources to fight the big transfer pricing cases, what would be or should be a suggestive way of handling cases when the companies don't have the resources when they handle big cases?
If it's a big case, I guess most companies will have the resources to fight it if they honestly feel that they have been badly treated. And you can get really good support from big boss and lawyers as well. But I think we're definitely in a better position because we have tax experts in house who understands our own patterns and can take the discussions. I think what just as my recommendation to anyone is that take it very seriously when the audit starts and make sure that you explain the business and the reasoning behind. And you don't necessarily need a tax professional to do that. Anyone who understands the business can do that, and you can have a tax advisor from a big four supporting you, of course. But the more you can explain, sometimes also be able to get out of trouble instead of having to go through all the different instances in the court process, which is not a pleasant experience for anyone, regardless of your size. So, and then if you have good reasons for why you have transacted like you have, then you should also be in a position where you can explain. Transfer pricing is actually very simple. It's economic sense. It's common sense. And there are a few rules.
Not a science.
It's exactly an art, not science, and that's also why of course there are disputes. And some of them shouldn't have been there. I'm actually just as a small comment to our own case, I am positive that if my predecessors back in 2006 have went with our fact patterns to the Danish tax authorities and said, this is what we have, this is what it is, do you agree? They would have said yes. But we didn't, and then we were fighting it 20 years later, and everything looks completely different in hindsight. So the more you can deal with in real time, the better you are.
Do we have any transfer pricing people in the audience? No, nobody does transfer pricing. Nobody likes doing transfer pricing, I guess. Yeah. So just moving on to the next question is, there is a a new animal in the game, which is called as ESG, which is now you have words like other companies, multinational companies, you are the pressure of tax transparency, country by country reporting. You are also part of something called as some initiative called as responsible tax principles.
The B team.
B team, yeah, B team. So my question is about the balancing. How do you balance between making a decision which is from the tax perspective really optimized, because the main aim of a company is to bring as much shareholder value as possible, which is the main aim for which the company exists. This is what we learned in the past. And whereas now we have something which is different out in the world, that companies should contribute to ESG and transparency, other things. So how does this balancing act between shareholders' value creation versus ESG initiatives?
The transparency. No, I think Denmark is probably one of the front runners when it comes to transparency, and I think we can be proud of that. Because none of us, I guess, is in favor of tax avoidance, and that's a reason that this has been introduced, and probably not too many Danish companies have been very active in any of the kinds where you would get into the area here, but there are for sure other countries, and US tax professionals even today have a different approach to tax than we have in Europe. So they are much more, I would say, aggressive in their tax planning and things that they feel is natural. And of course, you can do that. You can see that in the law. You can do that. Where we in Europe are typically going more back to what is the meaning behind the law, what was the intention of the lawmakers. So it's moving from finding the loopholes, which was an art in the past, and big fours and lawyers have spent years on finding holes in the law. That's just not sustainable. You want to be recognized, and I think that goes for most of the European companies. We want to be recognized for your business purposes. What you bring to the market. So it has gradually changed. So it's not like you wake up one morning and you don't do tax planning anymore. But it has been a good journey that companies has been on, and we have moved from where it was scary that other people wanted to know about our tax affairs to a situation where today it's natural and we expect it and we are comfortable with it. When Maersk, as you mentioned, was one of actually the founding fathers behind the B team. So my predecessors went into this, and that was an organization who wanted to do good, and some companies who wanted to be good corporate citizens, saying, we want to set up some principles that we can live by. That was then translated into 7 principles, which you can then follow more or less. There's not a this is right and this is wrong, but there are some guidelines and guidance to how you should think about your tax affairs. So Maersk have for many years also had our tax policy as tax strategy available online, but when 6 years back when I joined Maersk, it was the normal things. So you could read our tax policy and strategy, and you couldn't really see what kind of company it was. So it could have been Lego, it could have been Carlsberg, it could have been Novo Nordisk, but it was Maersk. So what we have changed, and are still working on improving, is really to bring our own story out to the audience. So we are spending a lot of time in our tax report, which we publish every year together with our annual report. We explain, how should you look at a shipping company, a logistics company from a tax point of view. So we explain in details why our effective tax rate is not a good measure. To viewers. We explain about the tonnage tax. So this is for us today. It's a good way to bring our narrative out to the audience. And then every year we have added a bit more. We have and this was particularly important in the Corona years, where our profit was very high due to the constraints and the market situation and the very high freight rate. So our profit was higher, much higher than normal, which gave us a very low effective tax rate. And of course, we were being bombarded by people who wanted to understand this. Journalists were very keen to understand why can you, as one of the biggest shipping companies, have a very low effective tax rate.
That was in the media at that time.
That was in the media all the time. It was always the headline, and it just makes life a bit easier when you can say, point to our tax report and say, this is what we have published. Go back and read this. I don't know how many times we have sent journalists back and said, start here. Understand this. It has been written so anybody can understand tonnage tax and how we are being taxed on the different parts of our business. We have the terminal business, which is the big port terminals with heavy investment, asset investment, and the logistics parts. That's land freight. We have air business. Which is also taxed or following the Article 8, but being taxed as a normal in Danish corporation. So we have many different situations within our activities. So that made good sense. And then because we know that there's an interest in understanding our tax payments, and we started out showing, okay, where do we, 80% of our taxes, where they pay there. That was in 20% of our countries. So we showed that heat map, and now for a couple of years we have had the full CBCR report also published in there for anyone who wants to understand the tax. And particularly if you are in a company like Møller, where it fluctuates so much, and everybody in Denmark has an opinion on Maersk, it is nice to say, we know this and we acknowledge it, and we are open to take that discussion and explain.
Just before I ask questions, and we are soon coming to the end, is a philosophical question. People, some of the companies, they don't want to be too transparent because they are worried about criticism from the outside world. But you, as you mentioned, transparency benefits. Is it that you found more benefit? Is it the case that the world is going forward, considering the tax transparency measures, CBCR, country by country reporting, transparency is the way to go in the future? Everything is open.
Everything is open, and you need to live with it and embrace it, and you need to own your own narrative. I think that is the opportunity of it. So, but of course, and I have all the arguments for why transparency can be difficult. You can have your competitors can read something out of it if they want to. If you have if we, for instance, had only one port in port terminal in the country, everything would be completely transparent to the port lying next to it. Do you want to share that information with your competitors? Probably not. But in our case, we have more different activities, and then our the official CBCR data that we submit to the Danish tax authorities is also consolidated with our parent at the APM holding level. So that's a lot of other activities. So I don't think it's that dangerous today, and I think it's also fair that that people want to know. It is fair that a normal Danish taxpayer will want to understand, how can Maersk have a low effective tax rate. So.
Well, the same won't apply to anywhere else in the world. Denmark is different in terms of transparency.
We got a lot more questions from Denmark than we did.
I completely understand. Yeah. So before I go to our last round, we have last 25 minutes. I just want to ask if we have any questions here who would like to ask anything interesting to Mette. Anyone?
Just a short follow-up question when you speak about bringing your own story out and also kind of owning your own narrative. I remember also another kind of event where Maersk attracted some attention. That was actually about, if I remember correctly, the exclusion for shipping income and whether Maersk had kind of lobbied for that. And then, the criticism was how can you do that? And then at the same time claim that you are a responsible, tax responsible company and having the BT principles. So it's familiar with the other thing you talk about. Have you learned something in particular, either as an organization or as a head of tax from this these kind of events, if you can call them?
You learn from all of these difficult situations. Yeah, it's great that Danmarks Radio had were running a story on this, and it is absolutely correct that we were very active on the advocacy side when dealing with the pillars, and we were very active from the very beginning. So when and we're not afraid of talking about that, because if we don't do that, no one else thinks about the specifics for shipping. So and we do that for whenever there's new tax laws that comes out, we are always looking at it from a point of view saying, how does this interlink with the existing tax schemes that we are following. So I think we can, it was never a problem for us to explain what we have done and explain that in details. And yes, it is correct that sometimes we also talk with the Danish tax authorities, and we talk with the tax ministers, and we talk with everybody in between. So that's clear. And in our tax report, we are also very open about this. We talk about how we are working with tax advocacy because we see that as our obligation also to have a voice and contribute with our specifics. It improves the quality of the law that's being implemented. No, I don't think that any law has been introduced where someone from the government has thought about the shipping. So someone needs to raise a flag and say, what do you think about the shipping? How do you think about that? And yes, what have we learned from that? If you know what you're doing and you know that it's right what you're doing, it's much easier to explain it. Also, when you have a microphone in your face and a camera in front of you. But yes, that was a learning on a personal level, preparing for that and dealing with a somewhat aggressive journalist who had a completely different view on the facts. But you just need to own your own narrative and be true about what you do. And if you know what you're doing and why you're doing, it's not difficult to explain it. And you might not be successful in explaining it to everybody, but that's also okay.
Any further questions here, please?
My question was in places like Panama and Hong Kong, where shipping is very ESG regulation is evolving. how does Maersk ensure that ESG goals are still credible and like not subject to questions like greenwashing, for example?
First of all, I would say we do business all over the world, and we have also activities in Hong Kong and in Panama. And I don't think you could be a shipping company without also being present in Panama. You have good reasons to do that. It's not a shell company or anything. I don't know if you can say that it's greenwashing that we talk about. We can explain, why are we present in these countries? So we are typically not present in a country unless we do business there. If we have customers there and we have employees there, then of course we need to be there. Also, if it's a country that is classified as a tax haven. And then we will be there. We will follow the local laws and rules there, and we can explain that in our tax report. We can say, yes, this is what we pay in these countries. This is the activities. This is why we're there. If someone wants to twist that and talk about greenwashing, so we.
Yeah, I think I see one more question there.
Thank you.
Thank you. My question is, what is the tax reasons that you must be present in Panama?
We have people. We have a lot of employees. We have a big office and setup in Panama.
Yes, but you told that it's very important to be present in Panama. So I'm asking, what is the tax reasons that you must be present in Panama?
There's no tax reason to be present. We are in Panama. We do business in Panama. We have a lot of employees doing logistics, dealing with port authorities. So we have commercial reasons to be there. We're not in any country for tax reasons.
Any further questions? Yeah. So I'm in the last 20 minutes of my discussion. Yeah. So the last question is about the organizational changes. Pillar 2 calculations. You have ESG reporting. You have carbon emissions because you are a shipping company. You are also being involved in various legislations that deal with the carbon. So all this affects the tax department or a tax unit which you are handling. So I wanted to ask you in terms of the evolution or in the future, how is the team had to evolve in terms of considering so many different forms of things, and in terms of as we also discussed, like the future people in the tax. Or in any professions, it can't be just one thing. The future person needs to be multi-talented. It needs to be also be a technologist. It also needs to be a specialist in the particular area it is. So it's the tax and technology. That was the future tax professional wants to succeed in his career. So for my question is, and also because as a big company, you have a different systems, different countries, is how do you keep good people from keeping up or when the job is getting more complex and complex? Because we have people who have been working from last many years, but considering the changes in legislation, new technologies, many things are getting complicated. So either and these are really rapid, it's like, this is not like you give a person 5 years or 6 years to change or retrain. Here tomorrow, today you have AI, next day you have ESG, next day you have carbon, pillar 2 rules, 1,000 pages comes out on uploaded a PDF. So it's like, how do you keep the, as a people function, as a people who wants to work in a tax function in the company?
I think it's probably more difficult if you're a smaller company. But in our case, we have a fairly large tax organization. And believe it or not, there are actually people out there who find tax compliance Pillar 2 context interesting and a new challenge. I kind of look at it as a new burden that has been put on us. But I can see that we have a lot of young talents who actually find it very exciting to be a part of something new. So in that sense, it's good for the tax function to get and to need the new skills. Like we need to upscale on accounting rules. We need to have much better understanding of our data and go into source systems and find how do we find the data. You need to talk to a lot of different people in the organization. The IT department becomes your best friend. It opens up opportunities for some. So we are luckily we are all different, and some would want to stick to what they have been doing for some time. For some jobs, that is also absolutely fine. And then there's a lot of tax professionals who are generally very curious and like the new challenges. And so it's I don't think from that point of view it hasn't really been difficult.
So people are liking reading 800 pages that come out every 3 months.
No, but then probably not only that part. But there's a practical part of it. There's two different words from these thousands of pages that comes out that not everybody needs to read. There's probably a few people in our organization who have read some of it. You can find your ways where you need to focus. So that's not for everybody. But you need those different skills. So you need the people who really likes to delve into this and look at this from a theoretical point of view and find out where are all the different problems in interpreting these new rules and where are the pitfalls. Other people who can then work on the data side and the accounting side and getting the data and structure it in systems, so you will have somewhat automated approach to it, so we are not drowning in details. And so it's a lot of different skills, and it gives, we don't, none of us knew about Pillar 2, but most of us have been able to upskill ourselves somewhat in that, and I think we all like or to learn new stuff sometimes.
Well, I think that is we as a CBS here, when we are preparing the students for going outside, prepare them for the future, which is coming, is me and Christina Lubinsky are doing a course on AI in the boardroom, and we talk about that as like the future is the students needs to be prepared for this world where AI, and it's not just a singular topic which they will be dealing with, but also needs to think from the perspective of how technology is going to affect strategy and how it's going to affect their career. So technology is really going to be an intrinsic part of the profession. You can't be just say that I know a law or I know a particular topic, but I don't know how the technology works.
I would like to challenge that a little bit. So it's not the technology as such that's a key. It's the data. So it goes back to structuring your data. We have. If I could unwind the time, there are things that I would do differently. So it is we are implementing today, and it will be different from each company. So you need to look what is the ERP landscape and the data landscape in your company, because that really determines what you can do. There's a lot of tech solutions that you can put on top, but they are useless unless you have structured data. So it's very much about making sure that you can capture the data in the right format. And I think if you can just looking a bit into the future, I'm sure that we have our accounting data in our IFS gap. That's the group gap that we use for our annual report. our financial statements are in local GAAP. It's the same data, but it's different way of looking at it. So if you take your group GAAP, you convert it. That's a logic, different logic you apply to your data. Then you can automate that to the local GAAP, and that's your starting point for tax returns, at least the corporate tax returns. So then you can put in logics to the data. Is that a technology? No, but it is automated. It can be any tool. It's not a tool in itself that's the key. And then with AI, you can get a lot of support in going into the transactional level. And we have 6,000 people sitting in India keying in our transactions. I'm sure some of them get it wrong sometimes. And we can't go through all these invoices, but AI can just run through it and say, we can split this up and say you can of this and you cannot stop this, and machine learning can read your data and learn from that and say this will always fall into this category and this will. So there's a lot that can help you if you focus on structuring your data. That is the starting point, and then you can do magic with new technology, but only if you have the right access to your data.
Yeah, that's data is another thing. Without data, many things won't work. Data is a new.
That's key.
Yeah, it's good. We are in the last 10 minutes of our session, but before I put the last word to Mette, I just want to ask: are there any further questions? Anybody has a question?
Thank you. I appreciate the burden that is put on the group companies all over the world. I wonder, do we have an answer to why it was invented, Pillar 2, I mean? Who imposed in Pillar 2 on the countries, imposed Pillar 2 on the group companies all over the world? And why did they do that? Give me the background for that. Is it to avoid the bottom to the race to the bottom between the countries? Or is it to avoid taxation of group companies?
I think the first.
The first.
Yeah. I'm pretty sure that the reason that we sit, that the companies today sit with this and tax authorities are sitting with this is because there was fierce competition between countries in having a low tax rate, attracting activities for that reason. And that's why with the Pillar 2 now it's very well thought through. What will happen is, and we're seeing this already, that a lot of countries with low tax rate are adjusting this or implementing a qualifying top-up tax because they want to collect their tax themselves instead of giving it away to another country.
Yeah, I understand that.
So there's a lot of
they may use a loophole, which is a refund afterwards from tax payments.
That's the next one for sure. That then the countries will be competing on something different, most likely, or some will, maybe not all, but I'm sure that there will still be some. And I don't think that we can stop that entirely. And Pillar 2 will not stop that entirely, but Pillar 2 is here to stay. That's for sure.
Last question from me. Would you think of a more simple way than just Pillar 2 and the minimum tax rate? More simple way to find the race to the bottom?
I'm probably not the right person to answer that. As long as countries have different or have competing interests, there will be competition, and some companies will move in directions of where the tax is lower. And if you want to have a level playing field, you need everybody to play according to the same rules. So there was a clear need for this if you wanted to stop the race. I'm sure there are ways where you could have done it differently, but all I can say is that this is for sure a way to stop some of it.
Thank you.
Yeah, you have a question, you have to be.
We have seen a lot of different rules for fighting base erosion and profit shifting. Do you see any rules that might be obsolete now because the companies doesn't have a
CFC taxation. Let's get that out. That would be very high on my wish list. And it goes back to all these layers. There's not much need for that, and that's why. And again, that's also something that we would be advocating towards the EU Commission and saying, we understand what you're doing. We understand that there was a need for this, but can we please go back and see if there are other things that we can take out, and CFC would rank very high there.
Thank you.
Yeah, before I wrap up and ask the last question to Mette, which is the last question because we have come to the end. I just want Peter Koverschmidt and Christina Lubinski to come up here because we have a small gift for you. And
We're both handing it over.
I think there's a card in there.
Hold on. We're gonna put this over. No, I mean, I guess. Thank you so much, Mette. It was really wonderful.
Thank you so much.
Thank you so much.
Thank you very much for coming.
It was a pleasure.
And thank you, Sid, for organizing.
last question is still.
But you already got paid, so now it's like you relax.
Yeah. So we have the last 5 minutes, and I want to ask you the one final word, which is, what will be the biggest change will be in terms of our shipping companies or multinational companies work in the future? What are the biggest changes which you think that are coming?
I hope that has to do with AI.
Yeah.
When I look at what we spend our time on, I think there are some computers who can do that much better, much faster, and with more accuracy in what we do. So I think tax will be even more fun in the future because we can spend time on the value added and what we are trained for instead of the more boring part of it. That's the data collection. So at least that would be my hope.
Thank you so much, Mette. And before that I go, I want to give a last word to Peter Koverschmidt.
Really?
Yeah.
I have more to say. I don't have a lot more to say besides thank you. Then also please notice that you have a little paper in front of you with some future events that Sid is already in the process of arranging. Some is ready with a fixed date, and some of the events are a bit in progress, but we will of course inform you continuously through various means. But besides that, I think I will thank everybody for coming in person or online. Thank you for organizing. Thank you for being with us, spending your time with us. Thank you to Linnea and Lina also, who has assisted us behind.
Thank you to Sid for some very good questions.
Yes.
Thank you so much for answering them.
A lot of questions.
Yeah.
I'm going to try and do
Do a little wrap.